All right, let's jump right in. Today, we're cracking open one of the boldest, most fascinating corporate plays I think we've ever seen. MicroStrategy's all-in bet on Bitcoin. We're going to really dissect how they're not just buying it, they're building this totally unique financial engine to get their hands on even more. Okay, so here's the game plan. First, we're going to look at the just insane scale of their holdings. Then we'll tune into what the bulls are saying, and trust me, their predictions are sky high. We'll explore why some think this whole thing is a once-in-a-lifetime anomaly. Then we'll break down the nuts and bolts of what Michael Saylor himself calls the digital credit engine. And finally, we'll see how this all ties into the grand strategy to actually amplify Bitcoin.
So, to kick things off, let's just try to wrap our heads around the scale here. The numbers we're talking about are, well, they're pretty staggering. I mean, just look at that number. The company holds an absolutely staggering amount of Bitcoin, over 673,000. And what's wild is that this number just keeps ticking up, purchase after purchase. It's this relentless pace of accumulation that really shows you they have no plans of slowing down.
Now, as you can probably imagine, a bet this big has attracted a whole legion of extremely optimistic supporters. So let's take a look at what the people who think this is one of the greatest plays in financial history are actually saying.
Yeah, the optimism here is, well, it's way beyond just being bullish. We're talking about people predicting a $10 trillion valuation. This isn't just a belief that the stock is going to do well, it's a belief that this entire strategy will fundamentally change what's even possible for a company's market cap.
And you know, this quote really gets to the core of it for the supporters. The results seem so incredible they almost feel unbelievable. But the argument from proponents is that this isn't magic. It's just a logical mathematical process that happens to produce these absolutely extraordinary outcomes.
So here's the crucial point. According to this line of thinking, you can't just copy and paste what MicroStrategy did. The argument is that their success is the result of a totally unique moment in time, a perfect storm that can probably never be replicated.
So this basically lays out the 6 key ingredients that proponents say created this perfect storm. First, they didn't start from scratch. They were a strong cash flow positive business. Second, for a long time, if you wanted Bitcoin exposure in your stock portfolio before the ETFs, they were it. They were the only game in town. Third, they were also the only way to get leveraged exposure. Fourth, they were able to use these really unique financial tools like zero coupon notes when pretty much no one else could. Fifth, all of this created this powerful flywheel effect as Bitcoin's price took off. And finally, number 6, you have Michael Saylor at the helm, a true believer driving the whole thing. The argument is that this exact mix of factors, it's probably never happening.
Okay, now let's get into the mechanics, the real how of it all. We're going to break down the actual financial machine that makes this whole thing possible, an engine that, in Michael Saylor's own words, they kind of just stumbled upon.
The entire concept kicks off right here. See, normal credit is usually built on collateral that goes down in value, right? Like a car. But digital credit, as they define it, is built on an asset that's designed to go up in value. So when your collateral's value is constantly rising, Saylor argues that your credit risk is actually falling exponentially. It just completely flips the old model on its head.
And this slide right here really shows the key innovation. Instead of taking on regular old debt that you have to repay, they issue something called preferred equity. So what's the crucial difference? Saylor says you sell it with the intention of never paying back the principal. Think about that. By getting rid of that obligation to repay, he claims you basically wipe credit risk right off the table.
So Saylor himself points to these 3 big breakthroughs. First, that appreciating collateral we just talked about. Second, the risk is totally transparent. It's not like a bundle of mortgages where you don't know what's inside. Bitcoin's price is public for everyone to see all the time. And third, the way they get the money, that preferred equity, it shows up as an asset on the balance sheet, not a liability. It actually mitigates risk instead of amplifying.
Then they found this other major advantage. It's almost like a feature hidden in the system. Because the dividends they pay out are funded by selling new equity, not from the company's profits, they get treated as a return of capital. So for investors, this means those dividend payments aren't taxed like regular income. Nope. Instead, they just lower your initial cost basis, which defers any tax until you finally sell. That is a huge advantage you just don't get with a typical corporate bond.
So, what is the end game here? Where is all of this headed? Well, all of this complex financial engineering really has one main goal. Not just to hold Bitcoin, but to use this engine to actually outperform Bitcoin itself.
This is that flywheel, in action. They use the digital credit engine to raise a bunch of money. They use that money to buy more Bitcoin. This increases the amount of Bitcoin that's backing up every single share of the company's stock, which in turn amplifies the value for all the shareholders. It's this self-reinforcing loop that's literally designed for exponential growth.
And the predictions you hear from supporters really reflect this massive goal. I mean, this quote just perfectly captures the essence of the grand vision, that the company's hoarding of Bitcoin will actually outpace even Bitcoin's own massive price appreciation. The goal is to create a truly unique asset in the process.
And that, right there, brings us to the final thought. The entire thesis, the whole strategy, rests on this one really provocative question. If this digital credit engine works exactly as designed, spinning that flywheel faster and faster and faster, could MicroStrategy stock become something more than just a proxy for Bitcoin? Could it become an amplified version of it? That is the billion or maybe even trillion-dollar question at the heart of this incredible financial experiment.